Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Sorry for the delay, a little technical thing going on here. I hope we have it sorted out. This stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis to overlay structured trades on. It's based on the integration of Bookmap order flow tools using structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as the Discord server. Thanks, Dan, and thanks for the assist. So you guys know I always have to remind you I am streaming from Costa Rica, and we have somewhat of an unstable infrastructure here, which means the power can go out for no reason, or the internet, just sort of leaves the building for a little while. So if that happens and you're in YouTube or Discord, please be patient. I will typically recycle back in a couple of minutes and YouTube will restart automatically. Also, as just in a little aside, so you get a little sense of what Costa Rica might be like, and I'm in a very small town, so this is not what you call a city by any means. We had horses walking down the street the other day, and so you understand these are just almost like your dogs would be wandering down the street. Well, here it's horses. So imagine just seeing horses going down the street, munching on a few bushes as they go by. That's kind of what we have here. That's how it's a bit different, not to mention the monkeys and the rest of it, and a lot of other things floating around, just in case you wanted to know. So let's get going. We have a lot to talk about. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, we have a special sale going on at Bookmap. If you're ever inclined, I'm going to say this is the time to check it out. Go to bookmap.com. There are a number of configurations that you can look at. And if you ever wanted to try Bookmap, I think this is, this is from what I've seen over the years here, the best opportunity you might have to save a few dollars. In fact, more than a few dollars. And also add-ons. So understand there's a lot of different add-on packages depending on what your specific needs are. Either way, you could always try them, see, and this would be a good time to put your toe in the water. And don't forget, Bookmap has a substantial library of education, plus real-time webinars and streams on how to use the tools in real time. Just saying, okay? So let's move on. Remember, this is auction market theory. Auction market theory really is how market works. The thing that is difficult for us always is operating in an environment of randomness. And we always are trying to get certainty and avoid risk. I get it. You get it. But the problem, of course, in trading is that doesn't exist here. So we have to figure something else out, don't we? And the way we might figure out trading is to, first of all, mentally get ourselves to a place of understanding that we can't predict anything. So let's put that aside. As much as our drive is to get it, because we don't want risk, I get it, you get it. Who wants risk? We want certainty. If you can't have certainty, then you have to solve for something else. And this is one of the reasons why I agreed to create Trader Lab, because of what I went through. I've been doing this going on 47 years, professionally and otherwise. And in my journey, and mine's a lot different than yours, because we didn't have technology, we didn't have internet, we didn't have computers, we didn't have PCs. A little bit different, right? So it was a very different world. And not only was the world different technologically, but even the understanding of how market mechanics, how the market worked. And back then it was really classical bar charting, head and shoulders, all the stuff that you've heard about and probably, initially used or maybe still used in your trading. That's where I started. So I started, and I'm only want to relate this to you because we're all the same. Not necessarily where we start, but what we believe. I believed that because of classical bar charting and measured moves, that this was a business of prediction. It was a business of being right. So for years, I was working towards getting random winners to be more right. In other words, more certainty, squeeze the risk out. That was the business, in my opinion. And where did I learn this classical bar charting? At the CME. They seem pretty credible. Why would they teach me classical bar charting when the reality is that's not how the market works, but nobody told me. And back in the day, there weren't really off-floor traders like me. There was off-floor traders. So that was another situation. So here's how the market tends to work. It is an auction. What is this thing, an auction? It's the same as your supermarket. I like to relate it to what you do all the time is shop. If a price is too high, you have price resistance, less buyers buy it. If the price is too high, if it goes on sale based on what you think a fair price is and it's now under a fair or retail price, you buy it, throw 4 in the cart. That creates rotations. The next thing in this volume profile thing, is that an indicator? No. All it is a measurement of volume because prices aren't created equal. So if a price is too high, you're going to have less buyers. In the profile, the volume dries up. If it gets too low, the sellers aren't going to keep it on sale. So the volume dries up because the price doesn't stay there long. And it does this rotation thing. In the middle of these rotations, where it spends most of its time is going to be high volume. High volume is like your retail price. So you walk in the store, it's retail, yeah, you throw in the cart, and maybe you grumble a little bit because prices are higher, but it's basically the retail price. You want it, you pay it. On sale, you throw more in the cart, price too high, you throw less in the cart. Simple, right? Context, this is the thing that is most troublesome for us because this is where time frame comes in. The market is constantly doing this auction process, too high, too low, in all time frames. Now, what is time frame? Well, let's think Matryoshka dolls, a vertical integration of time. So, in daily time frame, we might be going up. But in the daytime frame, as it develops, we can go up and down, and you can be short, you can be long, you can be on your head. You could do whatever you want to do if you have an edge in it. So time frame is somewhat defined by you as far as how you operate in it. So the context is actually subject to time frame. So for some traders, they might be getting long, other traders are taking shorts, and if they have an edge, both can profit from it or take loss naturally. And then Bookmap's the order flow tool. Kind of what this is, I call it the tip of the spear, and that's why I put a little arrow there. Because when we get down into microstructure, we are overlaying what happens in the micro inside of all these other pieces. So based on time frame and structure, we can now engage. I hope that makes some sense. That's basically how the market works. Now, one other piece about the market, it's random. So now what do you do with this? Oh, what do you do? Well, let's think about what we do. Let's take a look at what happened yesterday. And if you remember yesterday, pre-FOMC, I spent time talking about basically FOMC is a unique environment. And it's really 2 days in one. So you have the morning before FOMC, before the rate decision, which is already baked in the cake. And the real thing is the press conference afterwards, where Powell answers questions. It tells you about the state of the economy, talks about the tariffs, talks about everything being whatever he does. And that's what creates the next move. So yesterday in the morning, and you should review yesterday's stream if you find these things interesting. The idea was shorts. Now, this is yesterday, and this is pre-RTH open. So yesterday in the morning, here was the plan. Yesterday's plan, now I have to take you back to a few pieces. Let me just see if I got this right. Yes, I do. This was Friday. Now I have to take you back to Friday. Friday sets everything up. Friday was a short squeeze, and then we closed down here. We got continuation selling, took out the sell stops here and sell stops under here. And we did that on this day. You remember we were short. And you can review all this in yesterday's stream. Then pre-FOMC, we have an inside day. Not unusual. And then we have what? Stops down here, and then the stops down the rest of here. Okay? So for yesterday, the possibilities were continuation down, blast everybody under here, or, and nobody knows, come back the other side and blast the buy stops up here. In the last place, we had stops was right there. And if you remember on this day, and you might not remember, but you can review these streams. This is last Friday's. We had a target there, get the stops, and here, get the stops. And we got to there, c'est la guerre. Now, what's the high yesterday? All we did so far, which doesn't mean we won't get there eventually, is take out the stops above that high, but we did not get above here. Isn't that interesting? So what might that do for us? Well, either we're going to go south of the border today, who knows? Take out this low, or take out this high and now get the stops here, which is still an open target, 69.10. So nobody knows. Now, the thing about this is there's a high probability that we take out either yesterday's high or low. And I'm going to just give you a little sense of it, and you have to vet everything for yourself. It's about an 87% probability. This is before the RTH open. So actually, it is a beautiful day in Costa Rica, Greenhorn. I just want to say, but it's going to be about 88 degrees, 85 degrees here, and it is the jungle, so it's a bit humid. So initially, now I'm going to show you trades, and most of what I share here in the stream are structured trades. The idea at Trader Lab, there's no holy grail. It's about helping traders define the condition of the market and only use trades that they have vetted that have a statistical edge in the current condition. And then, and this is part of the thrill of trading, we're not going to know the condition changes until hindsight. So there's none of this predicting thing. Don't you wish? Me too. But I gave up that wish. What I've done is my wish is just to follow my plan. And all I have to do to stay in the business and generate profits in a random environment is follow my plan. It's not the outcome of the individual trade, which we're all attached to. Oh my goodness, I want to be a winner. I want to get approval. All the things you need psychologically have nothing to do with this business. So you have to take the things, recognize your primal wiring and needs and the dopamine that's circulating in your brain, and also the cortisol, fight and flight. These are things, harmonics and chemicals. You have to learn about yourself, your physiology, and your psychology. Oh, you didn't think that was part of trading? It actually is the most important element, in my opinion. The reason is you don't understand yourself. You can learn to trade if you do the work. If you come to Trader Lab, you can certainly learn to trade if you do the work. And it's work. It's not, quote, the fun part of trading. It's what qualifies trades and gives you the courage. Because if you don't know you have an expectancy or an edge that favors you, same as the casinos do, they play games that only have edge. They don't know the outcome either. Well, if they can't figure it out, and they've been doing this forever, we can't either. So we have to figure out the games that favor us, not the outcome of the individual hand in the casino or the individual trade. I hope that makes sense. So the idea for today was over 80% probability to take out yesterday's high or low. So my first trades this morning were shorts. And, looking back, that's okay. But when it reversed, and I'm going to show you all these, then the market ran away from me. So then my plan says, okay, now what? Well, I have a couple ways to get in. And I posted those in Trader Lab. Now, I don't call trades because you don't need to take my stop. Everybody takes stops. Why do we take stops? We want to be here for the next trade, not for the one. Okay? So RTH open, 8:30 Central Time here in Costa Rica. A couple things you need to know. Overnight volume point of control, which is the retail price from the ETH. Remember, high volume, right, guys? High volume, and the ETH is a separate auction. So it's, what's too high, what's too low in the ETH. All right, well, let's go take a look. Let's look at this. So before anything even happens here, you got to look. So now this wasn't here, this IB high thing. ETH high, yesterday's high. And what was that percentage you're asking me? About an 87% probability to take out yesterday's high low. Well, was yesterday's high excessive? A short squeeze? Well, maybe. So for me, I'm thinking maybe short squeeze. But I'm not rigid. So I just put the trades on because I have no idea. When I say no idea, I'm being completely transparent. I'm not in the business of prediction. What I am is the business of alignment. So I come into this with the idea, I don't know. I just have a trade plan. And then I have to adjust this plan as the market develops. So it's not about being right. It's not about predicting. Remember, classical bar charting. Oh, a head and shoulders. It's going to go there. A pennant. It's going to do this. No, it's not have to do anything. What it has to do is buyers and sellers come into the market and they try to figure out in the shopping experience what, is too high, too low in rotation. So there's a high probability we get there, about 80%-ish. They're getting to the overnight low, 69%. Getting to the previous higher low, 87%. Taking out the first hour's high, which is going to be called the IB. We're not there at the moment, but we will be. 68%. The previous point of control, highest volume from yesterday's RTH, it's below us. 68% probability. Taking out the previous low, 53%. Previous high, 41%. But what do we know? We know there's stops above us, and we know the market is long. So what that sets up for us is a couple pieces. One is, if the market's long, then when we come in, if we open lower, we might get profit taking. So those become what's called responsive sellers. Now, we don't know if we're going to take out yesterday's higher low, don't know. So then we have to now align with the perception, not what will happen. So let's take a look. So RTH open, we have some levels, and the thing can do anything, right? What's happening? I don't know. So let's look. It's now going to take you into order flow and market mechanics. Now, I always say the open is not where anybody ought to trade unless they already are doing the other pieces and have a positive expectancy and have developed the discipline to execute. If you trade the open, you have to have everything else put together. And the reason for the open is there's no structure and it's fast. So the reason you should not trade the open is you need unconscious competence to trade it. In other words, you're just going to react. You're not going to think about, we start out incompetent and then you become consciously competent. Consciously competent is formulaic. In other words, you're thinking the steps through. That takes time. When you're unconsciously competent, it's already happening in real time. You're in a zone and there's nothing to think about. You just, boom, you do it. Well, that's where the unconscious competence comes in. Okay. And if you drive a car and other things or ride a bike, you've developed unconscious competence. Just remember when you learn to ride a bike, what was that? You had to really concentrate, right? Because you were not competent. You were learning. And then you became a terror on wheels. You didn't think about it anymore. We used to put baseball cards in the spokes and run around and thought we were a motorcycle gang. You ever do that? So, RTH open. Probably never thought you'd hear about riding your bike or driving a car. It's all the same. When you first learned to drive a car, you were concerned about how much pressure do I put on the brake? Do I go through the windshield? If I hit the accelerator, what's going to happen? Remember? Think back. That's when you're incompetent. And then you learn conscious competence. But you can't go out and drive, really. I learned to drive in New York City. I got to tell you, you want to find a place to drive? And I remember I took my driver's test, and it was snow on the ground, and you got to do parking, parallel parking. Try to do that when there's a snowdrift. But I had to do it. Anyway, so RTH open. These are buy sweeps. Now, in order flow world, one of the and this is 5 seconds in, okay? So this yellow line is called developing volume point of control. This is the retail price. Remember the shopping experience. So I'm opening, and right here I have no clue. Now, my inclination is to think shorts, and initially, and I'm thinking the yesterday's low will be on the hit parade, because if I don't get buying, there's longs in the market and they can become the fuel. So my thing was yesterday's. So my first trades are shorts towards yesterday's low. Now, so we have other traders and trader labs who are taking longs. It's not right or wrong. It's just plan. See, this is the thing. Your plan is your guide. And by that, I mean every component, not what should I do now? When you ask that question, you're already in trouble, in my opinion, because you don't have an answer for it. You never will have an answer for what the market's going to do. The answer must exist for what you will do, not what the market will do. So, and that's the random nature of these rotations. So right here, I'm looking to see who takes control. And, by the way, if you have questions, if you're in YouTube, please post them. I'll do my best. How we doing in YouTube? Everybody conscious? I hear the thuds. I think that's heads hitting, hitting your keyboard. How we doing in Discord? So let's look. So here it's two-sided. Now remember, I'm not saying I'm right. I'm as right, wrong as anybody else. It's not right, wrong in this business. It's plan and edge. Okay, you have to differentiate. You should write that down. What is it about being a trader? It's statistical probabilities. It's not right, wrong. If someone says, I didn't do the right thing, the only right thing is following your plan. That's it. When you make it up, you're already in trouble, in my opinion, because now you're inconsistent. When you introduce randomness into your process, because the market's already random, now you're gambling. Process gives you control over your fear and your emotional states. Process, because everything you're going to do, you already know. You don't know what the market's going to do. Casinos know what they're going to do. They're going to deal the next hand the same and play the game exactly the same way as the previous hand and accept the random outcome. So I get sweep, sweep, going up. I have, let me give you, remember the probabilities to get to the overnight volume point of control is approximately 80%-ish. Past performance, not indicative of future results. You must vet this. So I know I have that because it's the last retail price. And I also know that if I open and I'm opening lower, then possibly I can get profit taking. That's all I know. So I'm looking for a short. So I'm looking for the short. And I have to wait for my trade. So where is my trade? Let's look. Resting liquidity here. Rotate down. There's my sellers. Why doesn't the market go down? Because I got buyers. There's the iceberg. Stop an iceberg detector. So I can see this because I have delta. Now the delta is market orders and sell stops. 4 seconds in. That's why nobody should trade this. I trade it, but I don't know what's going on. I'm going, and I'm sitting here, but I know a couple of things. If I get sellers, I can take the short, but I'm extremely vulnerable if I do that. So let's look. And I'll tell you why I'm vulnerable. Because if I join the sellers early, there's going to be buy stops above the opening swing. And in Trader Lab, I always talk about this. Opening swing, opening swing. So the opposite. So remember how the market works. Market goes up to go down. Where's the stops? Under here, these buyers. Now, who are the buyers? Might it just be longs who are basically, we open lower, the longs in the market, or what? If you're not long, wouldn't you think about a continuation long? So I'm looking at the longs, but I know we also have longs in here, and I want to get short. Might sound illogical to you, but you're always going to get traders who didn't get involved yesterday, and now they want it today. But what about the longs that are already in here? Remember, the market goes up to go down. So right here, I'm going to get into microstructure. Now, these are very high-risk trades, and the risk, in my opinion, is only that you have to know the trade. In other words, you have to know what this is all about. So I have a sweep. A sweep often, not always, means that I'm going to get a counter rotation. Look at what happened here. Sweep, counter rotation. What happened here? Well, RTH open. Not even a second. Sweep. Is that it? Up, sweep, down, up, sweep, down. So I'm looking at this and I'm saying to myself, well, where? I don't know. Let's watch. So what does this represent? If the red bubble, delta, is the sellers, and you'll notice I have a lot of selling here. I get my red delta here, which is selling aggressors. Where's my sellers? Where are they? And now I see my buyers. And now I get big buyer. If I get big buyer and a sweep, Don't we want to see it to keep going? But what happens? Right here, the sellers get below the buyers. So right here, I'm going to draw a little line. Now, what I'm showing you is not anything more than helping you see market mechanics, microstructure. Sweep, why didn't it go up here? I got my buyers, Tom. Come on, it's going up, right? Yeah, it's going up until it goes down. If my sellers get below my buyers there and there, now it might set up a rotation. Let's just see what it does. Sweep, what's the sweep do? Rotation, rotation. So for me, I'm looking at shorts. Now, out here is my opening swing. So I'm looking here, and this is an area for me to short. So just saying. Notice where it comes. Okay, why does it do this? You're going to say, well, how do you know? Here's what I know. Not what it'll do, but where and why. And that's what you need to understand. Where and why. Why? Sweep, sellers. Why didn't it go up? The bubble. Delta, why isn't it going up? Now, rotation down. Now I know I have a layer that is too high. If I break low and I have a sweep, which is going to suggest down, and I get this, why? Look at now this is very nuanced, so don't worry about it. And this is my resistance. So if I'm sitting here with my jaw on the ground, which is often, I know my buyers were here, remember the absorption, and now I know my sellers are here. There's a sweep and the absorption from the other side. This is my range. So right here, I got my buyers. Right here, I got my sellers. And when this happens, teeth chattered, no clue. But right here, what happens? My sellers are here. And right here, when the sellers take control again, I can sell it. And now I have to mark this. And I did. Now, again, this is not anything other than a curiosity for you guys. But I'm always try to do in the stream here is show you microstructure. Not that, and it's not a trade. This is just a quick way to see market mechanics. So this thing is remember, it's an auction. I'm not paying that. Yeah, but it's on sale. I'm not going to pay that. Forget it. Let's leave the store. In the developing time frame, this is the retail price. In the microstructure, think of this like your mini mart. This is the retail price. So the valuation happens in all time frames as you think about it. Now, this is not regulated by time. It's up to you. Me, it's regulated by participant behavior. So everything above this is time frame oriented, even the ETH, because the market closes. So it's a segment based on time. But when we get into the RTH, there's no clock other than open and close. Now it's participant behavior. So it changes. So this sets up a short. So the short, once I get under here, so this is where I took my short. And the other thing you're going to say is, well, how do you know? Here's the answer. I don't know. I'm clueless. So if I put this short on, I know I've got longs in the market, and those longs can become sellers. In other words, if the market gets long, write this down. The market goes up to go down and goes down to go up. That's what creates rotations. So if I know I have longs in the market, I know those longs can get thrown out and maybe take out yesterday's low. Maybe that's that, and off we go into wherever or whatever. So for me, it was only shorts starting out. So short. Now, let's look at behavior. You got mid and VWAP, and this is too high. Now, here's another piece I know, and I post this in TraderLab, and I don't call trades because, I don't know anything either. And I'm probably one of the few folks that are going to tell you the truth. I'm not saying others don't. I'm going to say is, when I say I don't know, it is a psychological thing to allow me to be flexible. And I say I don't know because I don't. How can I know? That means I can predict something. I can't. So I put myself mentally in a place of knowing I don't know. So here's what I know. Opening swing high is here. What do I know about this? Remember, the market goes up to go down and goes down to go up. Well, if I get sellers and new shorts, including me, there's going to be buy stops over the opening swing high. And I always say this to developing traders. If you trade the open, you have to know that there's the possibility we're going to come back above. And then if we take out the sellers and then we run, all it is a squeeze, then the real move can take place. So when this came back, now I use trade management and it's an individual thing. I look at this, I look at liquidity. I know right here, this is an order flow trigger, just saying I can use this as resistance. There's my buyers, there's my liquidity. This is a potential trailing, you have to bet this. Breakdown, what is this right here? This is microstructure. Sellers were there. Buyers were there. What's this? Let me just show you a little of this. Now, some of this is advanced, and there's no reason to be doing any of this until you can get the broad strokes down. Just showing you. So this is how I use order flow. I can use order flow because I can look at this, and I can go, well, there's buyers here. There's the buyers. You see the limit orders. They're sitting there. We can see that with Bookmap. It's a wonderful thing to know. So I'm not looking at the dome to know that there's liquidity laying here. I get below it. If I get below the liquidity, it's resistance. Notice, buyers are here. What do I see? Selling icebergs. This is like what you call a sidebar, and the sellers are below. So resistance, sellers are here. Buyers are there. Break high, last place, here. Buyers are here, going to the moon. Sellers, there. Break low. Going to zero, Lewis. Watch. Resistance, resistance. Now, in the microstructure, sellers are here. Sellers are there. Sellers are here. Going to zero. Sellers, sellers, selling delta. What do I know about this? Absorption. But no clue. Come down here. What do I want to see for a short? Keep going. Yeah, well, c'est la guerre. Watch. So right here, I'm looking for a continuation. If this is resistance, I'm looking for it to break down. I have buyers here. Why do I know that? Not until hindsight, just like here. I have buyers here, but I have sellers here. So I have my support and resistance. And again, I don't know about this until I come across, okay? So then I know the possibility is to come up and take the shorts out from this leg. So I posted in TradeLab. This is not right, wrong again. Remember, I don't know. To be careful, because now what do we have? Buy stops. So now, and look where we come. Where was my support? The buyers were here. The buyers took control here. Let me draw a little box around this thing. Now, again, I don't know what it'll do until I see structure. So I have structure here. You see the buyers took control here, and I had resistance here. So I've got this now, and I've got this down here. Just going to show you. And I'll move on. I'm just trying to show you a way to read the market. I don't use indicators. What I figured out was the indicators were a problem, not the solution. Instead, if I can do this in real time, I can be active quicker if I understand. All your indicators are doing, they're like Google Translate. They're translating, this stuff. Well, I need to understand the complete condition of the market, and I also need to adjust to it. So what do I know? In the developing daily time frame, this is the retail price. I know there's stops sitting up here, and I know it's going to zero until it doesn't. Right here, again, is my resistance, and this will become support, which I don't know until I break here. Then my short is over. Now my resistance is here. So I come back to this price. Let's use language. This is the retail price in the developing daily time frame, highest volume for the day. Going down in time frame, and remember there's no time, but we're going to call it that, this is too low. So I know this is support, This is resistance, and stops are over the current high of the day or opening swing high. If this price is too high, go back to the store, the supermarket, it's too high, I can bounce off it and go down and go to zero. But where's my support? It's right there. Why? You're going to say why? Because the sellers were there and the buyers were here, and the buyers took control here, and this was resistance. So I have this, all this right here, okay? So this is support. This is resistance. Problem, opening swing high. So for me, out, and then I'm looking for it to come across and squeeze these guys. Hope I'm not taking too long, but if you understand this concept, then you understand almost everything except the locations. So now I have this. So no more short for me. Look at this. So now, while under certain conditions, this would be a short, because we are coming back above, and I have over an 80% probability for the ETH high, nothing for me to do. Watch. Where's my support? It's here, right? Where's my support? Where was it? Wasn't it here? Does this make sense? Can you kind of see some way to read this based on how the participants interact, based on the shopping experience? If I go to the store and it's my mini mart, and I'm just using these as examples, and I only call it what I call it because instead of getting all hung up on all this stuff, it's really what the market's purpose is. And that's to figure out too high, too low. And it does it in consolidations. So the sellers are here, the buyers are here. Well, and resistance was there. So if I break out, then I found too low. If I come back and it's support, it's too low. If I come back here, it's too high, too low. And where's my resistance? Too high. Support. Does this make sense before I move on? Is everybody with me? Where do I get the levels? It's the auction. It's as it develops. And order flow and structure. So, and if you're talking which levels, if you're asking about the statistical levels, that's a data mining, which we do in TraderLab. You have to vet everything for yourself. Nothing's mechanical. It's all random, and you want to step on a rake a number of times because it's random. So let's look at the language now. So in different time frames, this is too low. No way to know. Test here. So depending on your plan, this could be a short, but because of the opening swing high, and I post this in TraderLab, and I don't call trades, I take stops. Nothing unusual about that. This would have been a short under different conditions. But because I have sellers here, and now I have sellers here, the shorts are more vulnerable. If I don't get below the buyers here, then squeeze Ethereum. At least maybe. And where's my resistance? It's here. So there is resistance. This is support. When you start isolating the levels, you can understand behavior. Too low, watch. Too high, break low. Retail price in the supermarket moves lower. It's the highest volume in the developing time frame. It's now resistance. This is support. Now it moves lower. This is resistance. What do I do? Look at the different behavior. Too high, I'm out of here. Too low. Too high, get out of here. Pull back. Too high, you got to be kidding. Pull back. This is going lower. Price is going lower, but my buyers were here. Then this moves lower. Look at the difference in behavior. Instead of coming, I'm not paying that, coming down here and taking it out, here's where the change in behavior is. Now I'm already done with my short, but I'm watching this thing, and emotionally, I want to talk to you about my emotions. Hindsight, emotions. You should have stayed in. Yeah, but my plan says you got to get out because of this. Yeah, but I know it's going lower. Yeah, but your plan says. You got to get out because of this. I get out. I'm trailing my stop. I have no clue. I am not ignorant, but I am clueless because I can't predict. This says going lower, resistance, resistance. Okay, watch the change. Now, support, no idea. You know, me, not so much. When I see this, I think it's going lower, and the chatter, I call it Hyde, the lunatic under the hood, who can tell you what you should have done in hindsight. That is primal wiring. It is your enemy, not your friend. And this is resistance, this is resistance, this is going to zero, and then it doesn't. This is now the new retail price. Notice how we were bouncing this way? Now we cross above. As soon as you cross above, there's trouble. And now, where's my stops? Up here. Take them out. Okay, next trade. Now, I spent a lot of time here. Let me show you. This is called a single. This. Let me show you where it comes from. Yesterday, if I can get this over here. Now, we have to ignore all this stuff. This is a single. Now, what a single is like an internal gap. Well, that's not what you want to see. Let me show you. This is a market profile. Now, I always say, before you go running out of the room with your hair on fire, don't worry about this. This is yesterday. Now, this is today. Let's not think about this at the moment. It's called a single. And back in the days of market profile, I learned it from the guy who created it, Peter Stoudemire, in like mid-1980s, 80, maybe 85, 86, somewhere. And this is a single. What is this? Back in the day, and these are called TPOs. A TPO, it's a time price opportunity. We didn't have volume. So what we did is use time 30-minute brackets. And if the market ran and did not come back and fill in the 30-minute time, in other words, like a little internal gap, it was called a single. So this is a single. And this is a form of support and resistance, actually. So right here, and this is around, it's right there, 75.50. Let's remember, and this is where it is on the chart. I don't make these up. Let's see what happens. Where is this location? It's right here. So what do I have here? Resting liquidity, right here. So the possibility is, if you get long, you're going here. Now, for me, I'm still looking for shorts. So I took out the opening swing high, fine, and now I'm looking for a short. Let me show it to you. Now, this is just the way this might work. What do we see that's familiar? A sweep. Okay, that's one piece. What do I have here? Liquidity, resting in the book. And what do I have here? My single. So this is a location. Now, you have to understand, in trading, it's like real estate. It's location, location, location. It's not precision, precision. It doesn't exist. Those of you who are accountants and rocket scientists or engineers, you're going to find this more challenging because you're used to precision. It's required in your job. There is no precision here. There's a lot of slop. And a lot of that has to do with momentum. So you can have a location and the market can go through it, and then you're going to get your behavior that you're looking for, and then you still take a stop or it's going to work. So for me, I'm not on longs. I'm looking at this like early selling, squeeze the sellers, get buyers in, then turn around and get short. So I'm looking for a short. This is where my next short was. Let me show it to you. Now, and there's another piece, overnight volume point of control. Remember that there was an 80% probability to get there, and the single backing it up. So this is a location. That's all I can tell you about it. Location, location, sweep, liquidity, location. All this now is in alignment, and this was where my opening swing was. This is stops and sweep, and then we'll see. So now, buyers, look at the delta, going to the moon. Oh my goodness. I should have got long, except I want to be short. So, and again, I'm thinking I have a high probability of ETH high-low. I'm sorry. ETH high-low and also yesterday's high-low. So for me, I'm looking again for yesterday's low. Because I perceive there's a ton of stops now under there, and I'm going for that. Now, it could do anything, so it's not, as they say, I'm not married to a position. Watch. So, what do we know? Liquidity trigger, that's number one. Location, ballpark. Let me draw a little more out here for you. Structure. This is called structured trading. This is kind of what I developed for myself over, unfortunately, too many years of trying to be right and predicting and, all this stuff. And I came to the realization, unfortunately, after having the same random winning trades you all have, that I was still losing. And I'd have lots of winning trades. Gamblers have winning hands. It's not about winning. It's about edge. So I still lose. The house pays the gamblers. I'm fine. And losing is just paying overhead and cost of production. So sweep, location. You'll notice I'm not doing this in the middle of nowhere. I have to wait. So I sit here and emotionally I'm going, you got to get long. Oh my goodness. Isn't that what you feel? Using the term feel? Well, I feel it too, except I've learned that the feelings have nothing to do with the business. That's just primal wiring. FOMO. Oh, okay. Now what? Well, if I come here and I run into my sellers based on probabilities and structure and this, am I willing to put risk on now to come back and get the longs? The answer is yes. So this is a short. So here's the structure. Here's where the sellers are. Here's the break. Where are the buyers? They are there. That's why it goes up. Where are the sellers? They're up here. There they are. I need it. It's going to do one or the other, right? It's got to break under here. And there's the test. So I have resistance, the high volume. Remember, I'm talking about these high volume areas, the retail price. In the mini mart, that's this. If this price is too high, we get in a car and we leave it. But you like to shop in the mini mart down the street. Let's come back and check it. If it's still too high, these sellers are going to sell it again. And we can't put our stop here because we can blow into these stops, and then the sellers that were here on a stop pick might sell it again. So my stop has to be away. I never put my stop. I don't use a shoehorn. I used to do that, by the way. The reason is risk adverse. And the thing about it is, why would I use a tight stop? And then we all haven't you ever said they went for my stop? This is what's important. Is it possible your stop's in the wrong place as opposed to you're a victim? Maybe you're a victim, don't take this the wrong way, of your trade plan not being sufficiently vetted. Maybe that's where the victim comes from. So what do I know? Sellers take control. Does this look familiar? What's my retail price? It's there. High volume. I'm not paying that. Where were my sellers? Up here. What comes in over here? Liquidity. These guys come back in. What does that do? Skew, pressure. Think of it like a lid or a hand coming down. Short. Now, next thing. Where's my retail price in the next higher time frame or the developing daily time frame? This yellow line right here. So microstructure, this is all the same behavior in different time frames. This is like a volume point of control or retail price. There's the high volume. In the ETH, this was the high volume. Is this confusing? Maybe. So too high because I'm below it. What about the single? Too high because it was support. Now it's resistance. You know the concept. Sweep, order flow, location, and going to the moon until it doesn't. Now my volume is here, too high because I leave the store. Now we like to shop in the mini mart. What do I know? Sweep, order flow, icebergs, high volume. But what is it about high volume we know? It's retail. If a retail price is too high, we're not going to pay it. I'm out of here. Now, where's the next retail price in the next higher time frame? It's this yellow line. This is called mean reversion. And I always joke about, yeah, it's mean. So this is the scale. Or you can scale sooner. That's all up to you. Me, this is a reversion trade. Now, if this is excessive, I'm looking for it to take out the longs. This is resistance. Now, there's another piece here. What was this? Too low. So what I can do is, if I take the short, I'm going here for the scale. My resistance now is here. I can hang out, or I'm using a trade management process. Let me move this out for you so you can see this. And there's a lot more. This is basically how the market works, guys. Where's my resistance? There and there. Why? Why? Because the buyers were here and the sellers took control. Right here. There. And where's the high volume? It's there. And where's the outside edge? It's up here. So I can be selling any of this. Any of this. Stop has to be out there. If it comes back up, I can sell this. I can sell that. These are called structured trades. The key piece to this is this. Because what does it say? Language. In the ETH, that was the fair price. It's too high. Last auction. In yesterday's time frame, this was support. The concept support becomes resistance, etc., etc. Short, short, shorts. Is everybody seeing these? Now, I know I'm spending a lot of time, and where am I? 15 minutes in. Now, let's go. So it's short. Now, let's just follow the yellow brick road. So what did I have so far? 2 shorts. No longs. So, having a good time, looking at that statistic for yesterday's low, getting a champagne on ice. Robbie, you're not familiar with this indicator. What indicator? I'm not using any indicators. So that's why you're probably not familiar with it. I am reading a language. Your indicator, whatever you use, is a translator. The difference is I'm the indicator. I am speaking the language of the market. I am not using a backwards looking random input. I am aligning with the market. I'm using order flow to get as close to the behavior as I can. And I'm using structure and the interaction in all time frames, as you think of them, and I don't use time, of the participants. Well, let's just pull this right out here. What happened here? Let's just pull this out of thin air. Chop, chop, what's it doing? It's going down. Now, what happens here? I consolidate. It looks like this. Too high, too low. Sellers are here, buyers are here. I can see that it's a consolidation. The volume in this structure is there. If I break away from it and the buyers are here, how do I know the buyers are here? Because it went up. How do I know the sellers are here? Well, there's the iceberg. What? It went down. So I know I got buyers and sellers. Now, what can happen here? If this is too low, I'll go up. And I know I have resistance there, by the way. Or if it breaks here, I'm going south of the border, and this volume in this is too high. It's an auction. Now I go down. Where's it going? I don't know. Where do you think it's going? I don't know. Going lower. Okay. Now, this is yesterday's volume point of control. What is that? The highest retail price from yesterday. Let's go back to our statistics. There's a 68% probability I get here. This is another place to scale, exit, or hold. No matter. Your plan, not mine. Watch. Here, microcomposite volume point of control. Let me show you where this stuff's coming from. I'm going to just show you where this comes from. This is yesterday, so ignore what's over here. So yesterday's high, yesterday's low, trading towards the low. This, and they're on top of each other, but I'll try to separate this if I can for you. This yellow line is the retail price or highest volume from yesterday. 70% probability to go there. And by the way, no idea. This one down below at 48 is a higher time frame. It's the same thing. They're inside of each other. So if so what this is, swing low, swing high. And yesterday we just poked the stops here and that was it. And we came back inside. That's why I was looking at short. But I do know when I did this at the top of the stream, if you missed the top of the stream, that there are stops right here. So if I can still come up here, but or take out yesterday's low and continue taking the stops out for the longs. This is a consolidation in a intermediate time frame. If I take these individually, each day has its own high volume, or each session. ETH has its own high volume. When I get into a higher time frame, an intermediate time frame, this orange line is the high volume or retail price. So I can, with a 70% probability, I go there, and then the retail price in the intermediate time frame is there, 48, 49, whatever it is. Now I have no idea. Remember, I don't know. I know levels where I might get reactions. That's all I know. So this is a target, 68% probability, and you have to vet this for yourself. And now I have, and as far as I know, it's going to zero, right? This is another target. And let's go a little further. I have the possibility to take out yesterday's low. So for me, I am going for yesterday's low because I have an 87%-ish probability to take it. I could be done here or still going, and that depends on number of contracts. Let's watch. Where's my resistance? Let's come back. Order flow. Let's look. Microstructure. Going to show you another little advanced pieces. Now, this is not mechanical, and some of the things I'm sharing with you here are advanced. You don't start with this stuff. You really need to learn to read what it says, language. My indicator, it's right there. What does it indicate? Buyers are here, and the passive side, the sellers, see the liquidity is there. The high volume is there. If I don't go north, I go south. Here's another order flow trigger. I get below it. I have a sweep, which suggests counter rotation. I get my rotation. Far as I know, going to go to the moon. What do I get? Sweep. So I have sweep, says down. I get sweep here, and it says up. Now, what it says doesn't say what it'll do. This is the critical piece, order flow. Sellers are below. I pop above. There's absorption. There's a seller, and I break below. So this is resistance. Going south. Location. So let's just look. Watch. Location. What happens? Where do we go? Come back. Where do we go? So I know you're asking me about indicators, and you're going, what are you doing? This is different. Why is it different? Because most traders using indicators, unless they have isolated and they have an understanding where they fit, don't stay in the business. I'm not saying there aren't some who do, but the failure rate is so high because most retail traders do the same thing. Resistance. So, subject to your trade plan, time frame, and the rest of it, resistance. It's also a short continuation trade if it's in your plan. Going to zero, remember. So this was just all the shorts for me. And now, where's my resistance? It's here. High volume is here. As I'm walking down, High volume is here, break low. So I have volume here, but I have resistance there. So I have to determine based on the rotations I trade in the time frame and the targets that I work towards, and I'm going lower. So trailing. So that's all open trade equity. I never get all of it, and I have no clue. What is resistance? Here. Support, resistance, break low, retail price from yesterday, resistance, still going south, having a wonderful time. Resistance, out. So, gave a bit back there, but it was a good trade. What can I tell you? Now, I'm looking for shorts again. Let me show you. And now I see this, and this is a different behavior. Notice the change in behavior. And I'm going, oh, whoa. Now, one of our traders in Trader Lab, I think, got long down here. So, Robbie, if you're not familiar with this, it is overwhelming because this is another way to analyze the market. Now, I said in the Trader Lab, and again, I don't have a monopoly on right or wrong. That's not part of the business. It's an alignment thing. Not to get involved at the mid and the VWAP. This is an outside edge, a low volume area. And let me show you. So when we're coming up, we have the mid and the VWAP here, and we have what's called a low volume zone here. The way to think about this, Robbie and everybody else, based on an auction. Well, first of all, this is resistance, but we got the bullet train going here. So what's going on? Short squeeze. Now, my next area to get short is here, outside edge. And the idea of this is if I come out and find too high, and I squeeze out the mechanical retail traders who either sell the mid or the VWAP or put their stops here. I want them to get taken out. That's why most retail traders, or a reason, don't have sustainability is because they're mechanical. They don't understand how the market works. And it doesn't mean we can predict. It means this is a business of alignment. So there's no trade here because there's stops here. So what I want in my plan, and I'm not saying it's right, I don't do this. I do is these guys need to come out, and then I'm looking out here to get short for a continuation to come back to that VPOC, which is the mean, the mean's up here, to come back here and then continue down and take out the low. So that's my next trade. So I'm looking here. This is my trade. So I'm looking for a short. I get through this and I go through my low volume area right here. So I'm looking for it to come out, take the stops. I have the sweep. So I have one piece and I'm looking for a trigger right here. Right here. I'm looking to get short. And I don't get it. It's like, here it is. Where's my trigger? No trigger. Uh-oh. What's going on? I don't know. Where? What happened? Came back here. Now I'm out of alignment. Now I'm going, what's going on? And I have to change. So right here, I'm out of alignment. So now I have no trade. It's running away from me and I feel FOMO. Just want you to know. Now, the fact I feel FOMO, you got to get used to it, you know. So I'm now in a situation where I'm out of alignment, but I'm not short. I'm now have to turn the barge around. I call it a barge because context, you don't recognize change, at least I don't, until hindsight. When it violates this, then I know things have changed and my thesis has to change and adapt, or I don't have a trade. Okay, is this making sense? You guys in YouTube, is this making some sense for you? And if you haven't seen this before, I understand. First time I saw profile or auction market theory, and at the time it was market profile, I really thought I was on Mars. And I never saw anything like it before. And I was, don't forget, indicator oriented. And then I built trading systems over the years. You know, I was managing funds and the rest. So I wanted to systematize it because I was trading over different asset classes. Now, there was no day trading back then. If you wanted a day trade, you were on the floor. I managed funds. I was a trend following, so it was different. It was a different animal. But so I needed to systematize it. So that was walk forward testing, data mining, and all this other stuff. Yet it didn't really change things because when you're curve fitting, you're always doing it from behind. The market of today is not the market of last week. It's the behavior you need to understand, not predicting what will happen. It's a very different concept, isn't it? So what do I know? Well, the yellow line now is my retail price in the developing daily time frame. I just ran away and I'm over it. How can I get long? Mom, what are you going to do? You're missing it. Oh no, I got to get in. I got to get in. Is that how you feel? Me too. Except I wrote a check out for all the errors I made doing that over the years. And it was so high and repugnant. I wrote the check out and put it on in front of my monitor for all the errors, FOMO, skipping trades because of fear, getting out early, moving my stop, anything, everything. And the number was so horrendous. So now I know this is the retail price. What do I know? Remember I was going to get short against a low volume area? Well, now if things have changed, I'm going to do the same thing, but in alignment with the direction of the market. So it can be out in here. Let's look. So all I'm doing, turn the barge around, and I'm going to get long. So let's look where that is. Here's what I know. There was absorption here. So I came down, and there's my icebergs. The sellers were absorbed, and I get the leg up. So I know I got buyers here. So that's one thing. So, okay. I know this is too high at the moment. Okay. Now I have to figure out how do you get long? Where's my location? It's going to be somewhere out here. Don't know. So I got mid VWAP. I don't necessarily get involved with that. I don't trade it in balance. Now this is always confusing because we have structured trades in TraderLab where you do get involved with the VWAP in the mid to come back here. It's called mean reversion. But because I have a swing here, I have to always look left, and I have a swing here, and I got a swing over here. So if a swing is here and I'm coming down, I can't step in front of it because there's going to be stops. I need it to come out. Now, if it comes out, I don't know where to. This is part of the thrill. But what I know is, and let's come back to what this looked like at the time, so you can kind of see what it was. So I'm coming down. This is that low volume area. So I know, and now the condition of the market is up, but how do I trade a market that's moving up if I'm not long? I have to let it rotate, and this becomes a condition called mean reversion, which means outside in trading. So it's not here because we're going to get mechanical retail buyers. I have to look outside where the stops are. Remember, the market goes up to go down and goes down to go up. I need it to go down to go up. Where? Out here someplace. Now, the someplace is part of the randomness. So I get through here, and now I'm at my location. Let's look. Let's look for a trigger. Notice the stops coming out. 200, 260, oh, the pain. Why? 300 here, mechanical traders. This is what the retail traders do. And they also have winning trades. Don't forget, everybody has winning trades. So do the gamblers have winning hands. Right here is a long. Watch. Now, I don't know. I'm out. This is my area. So I'm looking for a long out in here. So I'm looking for a trigger. Sellers, 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 icebergs. Change. Now you might not be able to get into this, but let me tell you why I can do it. Because I'm anticipating it. Not because I'm predicting it. I'm anticipating behavior because this is how the market works in this condition. Now, it doesn't have to rotate back. It could just keep going and I wouldn't have a trade. I do have other trades, but it could just keep going. It's not for me. But I already know, based on my plan, where my next trade might show up. And it's going to be in this area, somewhere. And this is a trigger. So let's look at it. Going to zero, Lewis, right? So what happens here? Location, an area, and my buyers are here. So, and you'll notice this is very subtle and it takes an understanding. Where's my upper rotations here? What do you see? You see anything? What do you see? Is that it? No, it's still going down. What about this? Change. This one's higher than all the other ones. Where's my outside edge? Microstructure now. So here, going to zero. Where's my change? I don't have it. I'm going lower, lower. I'm seeing my sellers. My buyers are like, forget it. Sellers going to zero. There's a buyer, not over here. Forget it. Sellers in control. Here's a buyer, not going anywhere. Forget it. Break high. There's change. Now, what do I know? Let's look. Now, when I say what I know, I don't know what's going to happen. Let's not confuse the statements. But this is what I know. I know in a microstructure that this is my retail price. This is your mini mart. My buyers are here. My sellers are there and there. That's what I know. And going to zero. Break high. Now I know that where my sellers were, right here, they got thrown out. Well, now my buyers are here. My sellers are here. My sellers are there. And I broke above all those guys. Now, if I pull back and what was resistance there becomes too low, I can get long. And I put my stop under here or under here where, subject to plan. And then I'm going here for a scale. That's called mean reversion. It's a specific trade that I've shared in TraderLab. And that's your scale. Now, watch. What's this? Where were my sellers? Got to find them here. Oh, there's another thing I got to tell you about. At 9:30 Central Time, we have something called the IB, initial balance. And going to your statistics, again, you have to vet. There's a 98% probability we take out the first hour's high or low. Well, given what's going on, I'm going to lean to the top. What about you? Do you think, which one of those do you think has a better probability? Well, given everything we know, going north. Well, then this. So this will be my next target. Let me show you. Now, you have to decide based on your plan what you're going to do. Before you're in the market and you go through these rotations and you want to lose your breakfast on your keyboard, you already know what you're going to do. You don't know what the market's going to do. So for me, longs only. Longs only. And I have the IB stat. So for me, until it breaks, it's longs only now, and I'm going for this. So this is my last long, and then it's hang out and teeth chatter. This is the mean, that's the scale. So from here to here, and then I can put my stop either under here or break even and just sit here and worry. Where's my support? Let's come back. Let me move this. See if you don't see something similar and repetitive. The thing that's repetitive, well, the randomness, but the structure. Where's this structure? Here. I'm going to show you if I can, maybe not. Guys, what I'm trying to show you, hopefully, is how the market works. Now, I'm not using indicators. I found that was not the solution, but it was the problem, because I put more indicators together to create more certainty. Well, it doesn't exist, whether you're using an indicator or anything else. Well, and then you put more indicators, then you have conflict and randomness. Well, if the environment's random, so don't forget that's your long, then what are your indicators doing for you? They're random too. Which randomness is better, the market or you? Well, I prefer to be consistent and accept the market as random. Instead of me, it's in the casinos, which is gaming, they don't make the games up. This is your support. And where are we trying to go? Here. What's this? Well, if you're still hanging in with this thing, you could be done with this up here because of the statistical probability of about 98%. I don't know about you. I like 98%. And you could be buying these sweeps if you know how to do it. You could be just trading rotations, or you're just hanging out in the Barca Lounger, because we're looking for it to take out this and keep going. Well, there it is. And don't forget, 87% probability to go here, and we have more stops up here. And now we're current. Whew. Guys, I hope you got something from this. I'm not done. Do you have questions? This is Trader Lab. You can learn this. Now, you also have to unlearn the things you believe are trading and differentiate. I'm not saying this is the only way to do this or even the right way to do it. But every day here in this stream, you see a consistent process. What's important, I believe, from my experience, going on 47 years of doing this, is consistency on your part, not on the market. The market's random. So let's throw out this thing about being right and predicting what's going to happen and all this. We can't. So we have to do something different. We have to think differently. We have to act differently. We have to use a process different than what most retail traders do, because 95% or so, whatever the number is, fail. So if we're doing what they do, I don't think it's realistic to think we're going to have a different outcome, even though we all have winning trades. What kept me doing a process that didn't work was the random winning trades. I thought if I just work harder, I'd make it better. So I tune, tweak, add, remove, more indicators, less, throw this, throw that. Have you ever wondered why, if you open your software toolbox, there's 100, 200 indicators in there? Here's why. They all work randomly, but they don't have edge. So we put them together to get edge. Edge means the probability of more winners than losers. So you're going to still have your random winners. And in the casinos, the gamblers have random winners. But the house has the edge. So you have to decide what side of the table you want to sit on. Do you want to be with the gamblers who are all doing the same thing? Or do you want to step away from what most do and find out what a smaller percentage of the trading population does? And that is not use indicators, use some, but know where they fit and know how to align with the market and define very specifically what you will do, not what the market will do. I know what I will do. I have no idea what the market's going to do. So my process is very specific. Depending on what happens, I put my trade on, I take my stop. I put my trade on, I manage my risk, I get scaled. I then scratch, subject to my plan. I have targets that are statistically, favor me, and then I have trade management that follows the trades if I have runners. That's it. If I get out of alignment, I'll take a stop, and I won't recognize change until hindsight. Once I recognize change, I have trades that are qualified for that change, and the ones that were previously qualified are no longer qualified. I'm trying to stay in alignment, and I only have hindsight to know when I get out of alignment. So I'm always going to be getting out of alignment when things change, and then I reconfigure. It's almost like a plane. I'm flying at a certain altitude, it's trimmed one way. Things change, I'm landing, I change the trim. See? So it's not generic. The trades are qualified based on the condition. So what's the condition? North. What am I doing? Longs. Am I taking shorts to fade? Nope, I'm not. You? Subject to trade plan. Are you a counter trend trader with an edge? Do you think it can't go any higher? So you're going to keep selling it? Or are you going to use counter rotations as long as the structure's intact for continuation longs? Which side has an edge? You see? That's really it. It's really not more complicated than that. Here's what it is. It's random. So if we can accept randomness, we're not here to be right. We're not here to respond to our primal wiring, fight, flight, and all this, because we're wired to avoid risk. You're in an environment of risk. How can you avoid it? Well, if you can't avoid it, then you got to solve for it, and you also have to solve for randomness. So the idea of predicting and being right doesn't exist. It's an alien environment. So you really need to understand the environment you're in and the tools to help you operate in it. Not what some influencer or some chat or somebody you've paid a boatload of dollars to tells you is the right way to trade. Even in Trader Lab, it is not what I share. It's the idea of you understanding market mechanics. I share 60 PDFs of structured trades. Not that it's plug and play, that doesn't exist, that you can take and reverse engineer and vet. You only need one trade that you can execute and develop the discipline to overcome your fear. Because if you can't do one trade, you'll do none. So the first thing to do, come to Trader Lab, if this is something that you might resonate with you, and then learn one trade. And you're here already saying, well, I want more than that. You're already in trouble. That's FOMO. What you need to say is, I'm building a profession. I want to have a career. And to get to a career, you got to start with a foundation of market mechanics and understanding. You can understand how the market works. How are you going to navigate it? How are you going to define when it changes? How are you going to know when you don't have an edge? How do you know where your trade might show up before it gets there? You see, that's what Trader Lab's about. That's what the business is. So I'm not making it up. Market's random. I'm not. And I take stops. Everybody does. So casinos who have it down pretty well, I think, pay the gamblers. You have to decide, all of us have to determine, are we gamblers or not? If we're gamblers with random winning hands, how is that sustainable? How about it isn't? The thing that keeps us doing what doesn't work is the random winner. That's why if you ever go to a casino and you have a winning hand, you get all excited and you sit down and you play again. Yeah, but you don't have an edge. How can the casinos afford to pay the gamblers and still be profitable? Because they have an edge. Do they change the game because they pay a gambler? No. Do we change what we do because we take a stop? Yes. If the casinos did that and changed their games after they pay a gambler, they'd already be out of business. But that's what you're doing. You're on your way out of business. You really need to understand the business you're in and then design a solution to operate in the environment. I hope that's making some sense. Please give a like if you're visiting in YouTube. If you're getting something out of this and you want to learn about the Trader Lab. By the way, the Trader Lab is not about me. I'm just a trader. Been doing this a long time, and both professionally and otherwise. That doesn't mean anything other than I might be able to help you. I can't solve it for you. I can share what I understand and what I've learned, and I've paid a very high tuition to learn it, and I'm glad to share it with you. But I can't give you a cookie cutter, do what I do type of thing. It won't work. You have to find what resonates with you. And when I mentioned about this hierarchy or process of trading, I mentioned to you that it's time frame. So I'm trading in multiple time frames inside each other. So I use the microstructure that I see with order flow and Bookmap to trigger. But the same thing that's happening in these little structures is happening in the bigger structure. It's the same. So this yellow line is the mean or the high volume for the whole day. When I go down in time frame, I'm just pulling this out of thin air right now. Let me show you. This is not a short. This is just behavior. You have to understand the behavior, and then you can understand how to use it. What is this? Come on. This is a microstructure. Sellers are here. Look at the liquidity comes in. That's pressure. It's like a hand, the invisible hand. Sellers are here, icebergs, and the buyers are here. Buyers, sellers. Volume is there. If I break away from it, resistance is here, there. Now, and this is micro, okay? If I go up in time frame, this is the retail price for the whole day. It's right there. The retail price in here is right there. So I can do the same process. When it breaks away and returns, it's reverting. And then if it reverts here, if I'm a counter trend trader, which I'm not, I could sell it to come there because it's the same thing in a higher time frame. Once you understand how the market works, which is an auction, this is an auction. Now, it's not a short for me. It could be a trade management tool to exit, to get long again. But statistically, I have an 87% probability of going there. Would I do what? Would I sell this? Or would I just use counter rotations for continuation longs towards an 87% probability? You see, there's the question. So when you put a plan together, you already know what you're going to do. You also know where might you get selling. Well, 6,900 with this, and you get a sell. Is this a trade management opportunity to exit or what? That's where your plan comes in. So it's not like ever, if you have a plan, what should I do? You already know what you will do. You don't know what this will do. That's the business of trading. Hope you're getting something out of this, guys. Please give a thumb up. As far as the IB continuation trade, we have another trade percolating possibly. Now you have to be very careful with this. Where's the stops? Out here, and this is called the IB continuation trade. Now, it's not a recommendation. Here's what you have to be aware of. Where's the stops? Let's look at the fuel. And this is not a recommendation. So we have micro high volume here. Buyers are here, buyers are here, buyers are out here. This outside edge is a possible long continuation trade, and it's not a recommendation. And the idea would be to come there and then out the top, or not at all. Not a trade recommendation. I'm going to leave that with you guys. Please give a like if you're visiting in YouTube. Don't forget, Bookmap is having a Black Friday sale, 50% off add-ons, December 1st to the 31st. If you want to stick your toe in the water, 60% off for the monthly, plus data. Black Friday, 50% off for a quarter. So up to you. Don't miss out if you've ever wanted to try Bookmap. Please give a like. Remember, the Bookmap Trader Lab's available to all of you at no cost. This is what it looks like. It's a community of serious, like-minded traders. There's a lot going on in here. It's a mutual support group. It's about you. It's not about me. Also, there's a library of webinars, some up to 4.5 hours long of real-time narration. This has about 34,000 views. There's a document section. You can look at that, statistics and everything else, which you have to vet. Ned, thank you so much for curating this for us and supporting the Trader Lab and everyone else who contributes. Appreciate all you guys. Thank you for making Trader Lab a very special community for serious traders. Here's the doc section. 60 structured trades, PDFs of structured trades that you can download and look at. There is no plug and play. You have to do the work. If you're interested in the business of trading, you might want to check out the Trader Lab on your journey. Thanks again for visiting Trader Lab, and I look forward to seeing you guys tomorrow. Trade well, trade safe, and only trade with a plan that gives you a statistical edge. Thanks again, guys. Don't forget to like if you're in YouTube. See you soon.